Welcome to Trading Lounge and the Euro Indices. I want to start with the German mid-cap here because we can quite clearly see that we've got this nice strong wave structure up here, and we're looking at this corrective pattern. We called in the top here. The first move that's come down through here, as you can see, is in three waves. And normally when we're looking at a three-wave structure back in a wave 4, then we would look at this as a flat correction. So I'll just go over that a little bit because it's quite interesting. You know, with a correction coming down, we can either have 5 waves down in the first leg, and if we get 5 waves down, then we know that we're going to get an ABC, and then we're going to get another 5 waves down like this. So basically an A and a B and a C. But when we have a correction that comes down in 3 waves here, then normally we would look at that. Yes, it can continue to straight up like that. But if we're looking for a bigger correction, then because we've got 3 waves down here instead of 5 waves down, then we'd call this a flat correction. A flat correction would be 3 down, then the B wave would be 3, and then 5 waves down here, coming back down to this low here, and normally this one can push up and here. It's called a flat correction partly because it goes flat, goes sideways, and normally stays within the ABC range here. So that's what I felt that we had here in terms of 3 waves down here, and then an A and a B and a C wave back up here for B, and then coming down for C here and finishing here. And it does appear that we've got 5 waves moving up through here, the same as we do on the DAX as well. And we'll look at that more closely. But I also want to point out that you know, we need to be mindful of a move down here in wave 4 for this market at 38.2%, for the wave 4 here at 2300 here. So that would give us, instead of this being wave C here, this would be wave 1 down, wave 2 back, and then wave 3, 4 and 5. So that's quite a sharp move coming down through here if that's going to be the case. So if we can just drill in here for 1 hour chart here, and like I said, this will be the same for the DAX. So basically I was looking at it, if I can just squash this up a little bit, wave 3, an A wave here, B wave over here, and then the C wave down here. So if that's going to be the case, I'll just bring this over here a little bit. Then we need 5 waves up here. The DAX counts quite nice for 5 waves up here, so would this market as well. So if that's the case, then we'd be looking for wave 1 here, say, and wave 2 coming back to the 61.8% mark here, okay, and then move up. So we could say that that's 24,500 here. We could take it to the 6 here. I think we'll stay with the 24.5 here. If this becomes the resistance here, this 24.5 here, but we could get a warning signal at the beginning of the 61.8% at 24.6 here. If that's the case, then we're going to have to do a switcheroo, which would bring this down for wave 1 here, and this for wave 2 coming back here, then wave 3 coming down here further. So that could certainly be the case. So you could probably even short this now and just allow this to be here a little bit as well, and then look to add to it later. But you obviously put in a much smaller position here. So let's just go over to the DAX now. And the DAX has moved down through here. We've got it as an A and a B and a C. There's a couple of things in here I don't particularly like in this particular count, but what we do have here is pretty close to a target market where we wanted to be at 11.8 or 12 here. So we're kind of in that space there. Not to say that it can't come down further. But this little move here, when we call the low in here, this little moving up through here, we found what we were looking for here in terms of 5 waves. So we're looking at an impulse wave and not a corrective wave here. So it's moved up there as wave 1. It's done its ABC back here. So that's its 50-60% retracement level here. So we could quite say, you know, keeping things simple, that if the 12,000 became the retested resistance, then this count is wrong, and we would need to be on the downside from that point. Would need to be on the short side. That would be the right thing to do, wouldn't it? So let's just go into the 15-minute chart and just explore this here a little bit. So so what I was looking at here is basically putting wave 1 here. Do I have a wave 2 there? Do I have one there? Let's have a look around first. No, so I'll just borrow one of these, place that there for wave 2, and then looking for wave 3 to the upside here. Just put wave 4 over there as well. I'll save that. So I'll just go back over what I've done there. Is that from this low here, I can count quite nicely. I'm not pushing this either, which is the difference. So I can count quite nicely wave 1 and 2 here, and then 1 and 2, and then 5 waves here for wave 3, then 4, then 5 for this third wave, ABC for the fourth, and then up for the fifth here. And then we can look at this here as an A wave, an A and a B and a C for the B wave, and then down for 1, back for 2, down for 3, back for 4. So we could look at wave 4 coming back up to the 38.2% retracement level, which is here, or the wave 4 of 1 lesser degree there. So we've got a bit of a, that's the wave 4 of 1 lesser degree here. So I'll just take that there, and that's the 38.2% retracement level. So a bit of a wide space really for such a small degree of structure, but you know, we can gravitate over to the 12,150 here. So if the market moves above the 12,150 and then later on finds this number as the resistance, then that would be, you know, your short trade lead in from that point. But the thing is here is that the move up here is 5 waves, an A and a B and a C. This is the just the 1270 group 2 here. So 65, 72 and 80 in this little area here is all group 2. So you don't want to see group 2 here becoming the retested resistance. So at this stage here we could look at this being up here, down here, and then we would need to see it basically move up from that point there. So once it comes down here, yeah, okay, so I just need to explain the downside now too. So obviously let's just put in, I think it's important to put this little level in here, the midpoint, the halfway between the 100 and the 200. I mean, that's where the dance is going to be. So if on the bearish side, I just don't like spikes there either. Makes it a little bit annoying, but I still need to. Yeah, it's a bit annoying, really annoying actually. So still works out okay. Let's just say that, you know, we're looking for an A and a B and 5 waves for the C wave here for wave 2. Okay, so that's not such a big deal. But what about if we end up with a bearish scenario? So in a bearish scenario, that would be wave 3 here, and the 38.2% would be back up here at the wave taken from that high and that low here, if that pulls into the 61.8% mark. So it's back up here, 38. It could be a bit lower. Wherever this wave 4 is going to play out here, if that ends up lower here, then that's going to end up lower here. So this wave 4 needs to line up with this wave 4, and then that would be the short for the downside. So it would be something like that here, and then would be moving down into wave 5 here. So down into the 12,000 area here. So I just want you to be aware of the 2 counts and how to go about doing that. So if we get, you know, let's just say that I get it right. Let's just say we go up here to wave 4, we come down for wave 5, then we go back up here. This high here is going to reflect wherever this high is going to be, with a version of the 12,150 being in play. But after it goes up there, reacts back down again, and then finds support on the 12,150, that's the point to go long from at that point, okay? On the short side here, if you only get 3 waves back up to the previous wave of 1 lesser degree, well then you can look to short down this area here. And the reason I'm rabbiting on about this too is because the S&P 500 here, as you likely know already, that's had the sharp move down. You know, we're kind of looking for, this could just be an ABC coming down here and have a little bit more to go here and then move up, and I'm totally wrong again. But the way that we've seen it is calling this top in here and pulling it back to the 2300 here. The NASDAQ is the same here as well, if we can have a quick look here. You know, I was happy with the count that I did here, but what I didn't like here is this 3-wave structure here. That made it corrective here. So it could still be a corrective pattern and move up, but I've still got this coming into this space. When I'm looking at some of the other stocks here, Apple hasn't moved off its high much, but it's made that first move down. So I can count here as 1 and 2 and 3 here, ABC for the 4th and up for the 5th here. So that could possibly be a top in there. We know that Google's top here of this intermediate wave 3 here has been coming off, and the sharp move down here makes it even look more bearish, and we'll be looking back down here for wave 4 down here. And of course the other elephant in the room is Amazon here, and we've looked for this wave 5 top here, so we're watching this, you know, become weaker here as well. The tech stocks have been weak in the US, and the banking sector in the US too. All the banks are, some banks are doing something, some banks are doing other things. Like Citi, for instance, has been making new highs. I think it's topped out now. Some of the other markets have been in bearish mode, still in a corrective mode. So they've been doing different things, but they're all showing weakness in their own way. So there is weakness in the air, so to speak. When we go and have a look at the AEX as well, we've got to look at it in 2 ways. We've got to look at it as bearish and bullish, and just be a little bit flexible and understand at what point we need to get in and so on. So you know, I can count this here up for 1 here, and then an A and a B and a C for 2 here, as long as that stays in here. And the 5 waves up here are fine. So the 61.8% pullback here, we can go and have a look at that in a moment. So it's possible for this to, you know, finish into here and then move up from here in their bullish count. But we've also got to be mindful too what's going on with this other pattern here. So this can just be the A wave here, the B wave here, and the C wave down here. And if that's the case, then wave 2 needs to go up there, and wave 1 goes to here. This move up here, I can't remember what we're working on here. Let's try the hourly chart, not that it makes a big deal. Okay, yeah, so we were looking at this as being an A and a B and a C down to here, and then looking at this as wave 1 and wave 2 here, and this as an A and a B and a C wave coming into play here. What we don't want to see here, what would change all of this really on the bearish side, if this low gets taken out here, then that's the game changer at that point. Then we need to look at this move down here as wave 1 here, and wave 2 coming back up here. Like, this does count quite nicely as 5 waves as well, but so did the S&P 500 in its move up here, when at the end of the day here, this really became an A wave here, B wave here, and C wave here. So in terms of actually going long here, we were looking at we know group 1 here was always a catalyst for going in here. Then we could have bring that down to here on top of the 225 here, or even down onto this one, but we've never got that support from that level there and been able to you know, move up from that particular point, if I put that in there. So we never got that support there to trigger any of these trades here. So we need to be careful here. If this is going to get bearish here, then we look at this as 1 and 2 here, and then this would be wave 4 and wave 5 still on that one, isn't it? So there's still going to be another one here, but this will take a little while to but definitely shorting this low here. But wait for basically wait for a retest of the 220 here. That'll lock it in. So let's just say move down, move back here, then take that low out here. Okay, so that would be on that side of it here. So long trades up here, short trades down here for that. All right, I think I've rabbited on enough here about this, but there certainly is weakness from the US, and that will come into these physical markets in the euro when that opens. So it's highly likely that these are going to move lower. Okay, cheers.